Very special episode on the trading block, man. First time me, Brandon, my boy Carrie on the episode together, man. So, man, we trying to do big things, man. Do big things for the culture, give them this knowledge, man. Drop this knowledge. And, man, on this episode, man, we're going to talk about FOMO, a big thing. A lot of people get into, getting messed up on that FOMO, man. Like, how you feel about that, man?
Man, FOMO is such a big thing that people don't understand. So if you don't understand it, the people out there, it means fear of missing out. The fear of missing out, FOMO. That's just an abbreviated version of it. It's basically what it's when you hear about a stock late, or either you hear about it or you watching on the market. Either it's rising really fast and you want to get into it late, or it's falling. You want to get into the options late, or you're trying to pump and dump it real quick. And sometimes it's best just to stay away from it, because if you
Yeah.
like I said, when you get into that, like, oh man, it's losing money, man. Sometimes just trust your technique, trust your strategy, trust the information you're getting. Now if the company's doing bad, and they're in bankruptcy, or they're in some debt, the same store sales are going down, then of course then you're doing the right research. But if the things are going positive, then don't be negative about it. I think a good example of that is Apple right now.
Yeah. Yeah.
Because Apple's doing great, bro. Apple's doing great as far as its innovation, its research, and it getting to VR. But if you look at the stock price, it's not moving that much just because the tech sector is hurting it with the chips. But that doesn't mean Apple is down. You know what I'm saying?
Yeah, definitely, man. I got caught up when in pump and dumps and fear of missing out. Myself. It was one time, 2018. I was me and a buddy of mine. We seen these 3 Chinese stocks that we seen rallying for about weeks. You know what I'm saying? So we get in first couple weeks. It's doing great. It's going up. Going up. So what we do, we keep going, because we thinking at this time we thinking like we're about to get rich. You know what I'm saying? We're about to retire off these three Chinese stocks. This is our key to retirement, and to get rich. So we kept going. We kept going. And 2018, Trump was president at the time. And this, as soon as we're getting in, it's going good. He comes out with his China tariffs wars. I think everybody remember that, the China tariffs wars with President Trump in China. It was
that's stuff, bro.
Oh man, it was devastating for us, man. Because soon as he said the tariffs about China, those stocks just went down. And instead of us, getting out. Yeah, instead of us getting out with our little gains, that we did have at the time, we had these massive gains already. Like, we was up like a lot, man, tremendous. So me, like, my fear of missing out came out is when I didn't sell when I seen it first go down. Yeah, I didn't sell. I was like, man, I just had these gains. I'm not selling. Maybe it'll come back. Trump will end this war with China. This tariffs war, not a war. This tariffs war, China. Right. And they'll come back. What happened? The tariffs war kept going. China wanted to put tariffs on the U.S. now. Kept going down. Now I got a loss right now. And I'm like, man, I can't go out with a loss. The fear of missing out on the gains I did have, I couldn't go out, and the fear of missing out caught me, I didn't sell. Then, long story short, I ended up with a big loss, one of my biggest losses that I ever had, So let's get into it. Explain more for the people so they know exactly what's going on between this, FOMO and pump and dump. All right. So here we go. FOMO. Pretty much, you're pretty much getting caught, of fear of missing out. So with that fear, a lot of people get in, a lot of investors get in, and, they see a trend happening, which usually is going up. So they get in and they think that, I'm gonna get in this trend and I'm gonna catch these gains that's already catching. But really, they get in with little to no research. That's the first part where they mess up. And they get in with a get rich quick mindset, which is definitely not the mindset you want to get in on a trend that's going up. Because as you can see, with the Tesla and the GameStop, you get in and it's too late. You want to be a part of that game, but at the time, you're really too late to the party. And, you miss out. 9 times out of 10, the stock cannot, hold this trend any longer. So, the trader needs to be honest with themselves and know they missed out. But, as a beginner investor, and, which many people in the market right now are beginners, they fear that missing out of getting rich quick. And they pretty much, get in at the high and it's too late. Now that FOMO has got them caught holding the bag, which we call bag holders, So, all right.
And that's the thing of where I say you're going into it for the pump and dump, where like you said, right in the screen it says, propaganda. That propaganda is the media. The media, the outlets is talking about, okay, like, hey, it's rising, it's going up fast, this is the new booming stock. So now you feel like, okay, I got to get a part of it. Like it says, you want to get a part of that late rally before it crashes. Well, like I said, if you hear the propaganda, it's too late.
Yeah.
And more than likely, like it says, you're gonna buy at the high.
Yeah.
So now you bought into the propaganda, all the noise, and like I said, by that point it's too late. So now, when you get to that late rally buying at the high, like you said, those hedge funds, they got the short on it. They were waiting on it. So
Definitely.
they trap you right there, and now they force the pump and dump.
So pretty much in a pump and dump, you got either hedge funds, hedge funds, firms, big investors, they come together, or even like a lot of retail investors come together and they pretty much get a cheap stock, get into it while it's real low, pump it up, put their capital, use their money to pump it up to make it seem like it's going on a rally. And at this time, they use the media, the news, social media outlets, telling people to get in the stock, get in this one, get in this one.
So next we're going to go into Tesla, how Tesla went into a pump and dump itself. And even though Tesla was, really, really well, and it was creating a lot of highs, it still saw its own experience of its own pump and dump. And we see it here, right here at that August 31st, 2020. It hit the three, like I say, it went to the high 3 times. So we look at it around July, it gets around to a high, it comes back down, and then between July and August, we see it regulate right in the middle. Right in the middle, it starts to really just fluctuate, really just kind of mellow out. It just stays on a nice little trigger line. Doesn't go up, doesn't go high. It just kind of just balances it out. And then what it's doing, it jumps up to that new high. And then what happens when it jumps up? The pump and dump comes. You see a sharp decline after August 31st.
Definitely, man. Definitely. You see that decline, and this is a prime example of a pump and dump and the fear of missing out at the same time. You know what I'm saying? Mm-hmm. This is the rally started right around the time, it's a big tech rally happened, and all of a sudden now they call for a split.
Yep.
I forgot, is it the 5-for-1 split? I think they did either
5-for-1.
5-for-1 split. So that made investors, they didn't want to miss out on that split. Some new investors didn't even know what was going on during the split. They got in, right. Then they got in at the high, of the split. Then right after the split happened, as you can see on this chart, it all went down, crashing and burning. You know what I'm saying? But Tesla's a good company, but it was just hyped up to the point to where these big investors, big firms, or the sharks, they came in and they worked on that trend, that news about Tesla doing a split. They put that in their advantage, and they took their gains. And we also have another, FOMO instance on Tesla when they got added to the S&P 500. As you can see, 2021 end of 2020, when they got added, they went on like a massive rally for like, this was going on for at least 2-3 months, you know what I'm saying? And it got all the way to 800. People like, can it keep going? Maybe it get to 1500 again. And what happened? They invested at 800 and they invested at the high. Then it all came coming down, as you can see right now. I think Tesla's around like 600 right now, floating around that range. So as you can see, like even if you get in the high on a good company, you still had that fear of missing out, which a lot of people did, and you bought in at the 800. People don't do their research on things. And this was the prime example with Hertz. You know what I'm saying? So people got caught on Hertz, it dropped from 20 all the way down to like $4 or $5. And then people thought it was cheap. And, Hertz is like a known company. So they thought it was going to come back. And what happened was it went all the way to $8 and crashed again. Then around this time, they said, they announced the bankruptcy. So it just went all the way down to like around $1, one or $2. Then again, a group of people, or maybe Hertz, I don't know who it was, they pumped the stock up again. They said it was going to go back, to entice a lot of beginning investors thinking that something is cheap is going to go back to what it was before. And now, not instances, it doesn't happen like that. You know what I'm saying? But doing a pump and dump, if you're a new investor, you wouldn't know that. I think the biggest thing to take away from this is if you missed it, you missed it. It's not coming back. Move on, do your research so you'll see the next opportunity, and prepare for that if the next situation happens, So right now we're going to get into a, personal experience of pump and dumps and FOMO and, how it worked in our advantage and not worked in our advantage, how did fear of missing out work out for you? How explain to the people your experiences.
Say maybe 4 years ago, I got the Snapchat early, man. Maybe around nine bucks when I first started getting into it, and I got into it again. Reinvested. It was around 11 because I saw it was going up, at a steady incline. And man, I let it started decline because I was hearing that Snapchat wasn't doing too well, wasn't doing too hot. Again, listening to the propaganda, I didn't do my own research. Just kind of listen to propaganda of it. Oh, it was struggling to find ads. It was struggling to find revenue, and not looking into what it was actually doing. The companies they were trying to incorporate, who they were trying to do business with, the technology they were adding to their filters. I didn't look into that. I just read and heard, oh, they're struggling. They're struggling to find ads. They're struggling to find people to do business with them. And then all of a sudden, once that news come out, of course, people sell. So if I'm correct, it went down to around $7, and I panic. That man, I just invested all this money, into the stock, and I double dipped my chip into it. Not only I invested, I double dipped into it, and now it's crashing. It's they're not doing well. People don't want to do business with them. And again, I fell into the propaganda, and I sold most of my stuff, most of my Snapchat shares, right? And now look at it. It's over. It hit 60 and now it's around 50 now, but it hit 60 at one point, man. And that hurt. But again, I had to learn. Okay, do your own research. And a way it helped me was with as we just said, Hertz. I did my due diligence with Hertz and saw how it was driving up its price. The price was just raising up, and I was like, okay, that doesn't. If you look at the time frame, it didn't make sense for when it was going up, because it was going up around February 2020, and the pandemic was, it wasn't in full fledged at the moment, but it was known and it was coming, and it was kind of known that the country was not in a good shape. So watching it, I'm like, okay, that can't be right. Like, why is it driving up in January, February when everything we hear in the news, not just in our country, all over the world, is that things are getting shut down, things are not going well, things may have to get put to a halt for a second. So I use that, and now I use for my own options. I put a short against it, because I knew it was going to fall. And then when it did, it fall. I trusted my strategy. I trusted my playbook. When it reached a certain spot, I got out. I got my profit, got out. I didn't try to double dip. I didn't try to say like, okay, well, it's hit a support and it's going to jump up again. Let me try to short again. No, I got my money. I felt good with where I was at, and I moved forward. Because sometimes fear of missing out isn't because you missed money. Actually, you made money and you want to make more money, and you think, oh, yeah, oh man, I can make even more. And it's like, bro, hey, you got a good grip off that. You know what I'm saying? You got a good bag off that. You just trust your strategy, trust your playbook, and move on. You know what I'm saying? You ain't got to worry about double, triple dipping your chip. You know what I'm saying? Just, hey, trust the market, trust your bag, and keep moving. And that's another part of fear of missing out that people don't really know. They think it's all just, you didn't make the money. Sometimes you actually do make the money and you just worry about making it again. It's like, man, listen, don't try to be perfect. You know what I'm saying? We ain't perfect.
Yeah,
And so
yeah.
that's a one, it's a spot that a lot of people forget about.
Because I seen the games, I couldn't let go of those games I had, were wiped out. My fear of
Right.
missing out on the games coming back. I didn't sell, when I could have sold a long time ago. I just kept taking the L's, holding the bag, and end up having to cut losses with a big loss, man. And that was one of the worst,
I
experiences I
know,
ever
bro.
had in the stock market. It woke me up into the fear of missing out. That was my first experience with FOMO. You know what I'm saying? I had FOMO and got caught, and it wasn't good.
I think
And
that's funny. Like, your first experience was on, you got your gains and you wanted more. Mine was like I say with Snapchat was I was worried about my losses. It was going down quick, and I was like, oh man, let
yeah,
me get out instead of trusting it and doing some research. So it's like it's funny how both of our first was the opposite end of the spectrum. And
another thing, with the fear of missing out, people are scared they're gonna miss out on more gains, like we all said before. You
right,
gotta know when to take your gains. When you see them. Uh, any gains is a good gain in my book. If you're walking away with money on a trade, that's a good trade. You could have got
yep.
more, but you could have lost more. You never know. And that's why we said do your research. Like you can't go off with somebody else's research. You got to always do your own research.
We know we preach all the time. Create your own strategy that works for you. Work it. You're gonna have to manipulate it. You're gonna have to go through some trials and error with it. But once you get it down, stick to it. Be patient and trust that your gains are there and get out.
Yeah, man. Yeah, man. And I got some more advice for the new investors, man. Don't come to the market thinking you're gonna get rich quick. That is the biggest leader of the FOMO here that I've been seeing. Don't come to the market trying to get rich quick, and don't invest in companies you don't know about. Invest in the companies you know about instead of the companies you don't know about, and you won't
Right.
get caught. You can avoid these FOMOs and pump and dumps. Beginner investors can take away from this, man. Do your research, practice patience. If you do your research and practice patience, you'll be set in the market, man. The market is not hard. People just make it hard. And don't be tricked. Block out all the outside noise. It's a lot of outside noise that's waiting to take your money. Well, I think we're going to wrap it up. If you got anything else to say, man, I think this is a very good video. People,
Yeah, we had.
going to
I
look
feel
at
like we
this.
covered the bases, man. I feel like we covered a good basis, and be a lookout for other videos coming up.
Yeah, man. So like this is what we practice on the block. We're coming at you real. This is real culture. We're doing this for the culture. You know, me and my boy Kerry, we just like you. We're everyday people, man. So this is the block. We're gonna come back with more videos. Just stay in tune. Check us out, man. Check us out on Instagram, Twitter, Facebook at the Trading Block, Co. Trading Block Co. We're gonna come with more good stuff, man. This is for the coaches. So you guys just, tune in, check in, and wait for the next video, man.